Okay, I am now recording this session. Okay? So as I have told you, we are going to talk about financial statement analysis for investment banks. FS analysis for investment banks. Let me repeat. Investment banks are not banks in the way that banks are banks. Investment banks are not banks in the way that banks are banks. The banks that you know, BDO, BPI, Metrobank, are commercial banks. The banks that you know, they are called commercial banks. Investment banks are very different from these commercial banks. Okay? They are of a different category. So, investment banks are firms performing the functions of creating capital for companies, government, and other entities. Investment banks are firms performing the functions of creating capital for companies, government, and other entities. So think of it this way. Let's say there's a business. Let's say there's a business. It's organized, say, for example, as a corporation. Now, they need more funds. Kailangan nila ng pondo. The business, the company, needs more funds. And what can they do? What can they do? They can go to the bank. They can go to the bank. However, the problem with going to the banks is that the interests are so high and they can only issue debt, but they cannot issue equity. They cannot issue stocks. Okay? They can borrow, they can have debt, but they cannot have new equity. Businesses, especially those large ones, will have to deal with investment banks. If a business needs funding, they would go to the investment bank. If a business needs funding, they would go to the investment banks. Okay, so if the business would need funding, they're going to give bonds or stocks to the investment banks, and the investment banks will sell it to them, sell it to the savers. Okay, so this is the flow of the security. Issue stocks, issue bonds. So that would be an entry that would increase equity or liabilities. If it is a stock, it will increase equity. If it is a bond, it will increase the liabilities. And the funds will flow in the lower arrows. Okay? The upper arrows, the arrows above, they represent the flow of the securities. The business would sell stocks, bonds to the investment bank. The investment bank would sell them to savers, okay, or investors. More appropriately, they are called investors or savers. More or less, they are similar, savers and investors. The savers and investors will give money to the investment banks, and the investment banks will use the money to pay the business for the securities being sold. I repeat, when we're talking about a very large company, maybe it's not ideal to borrow from a bank. Bank interest rates are high, and furthermore, you cannot issue equity when it comes to banks. So you cannot go to the commercial bank, or if you can do it, yes, you can do it, but it lacks flexibility. What companies do, the large ones, is they go to the investment banks. The investment banks will issue the bonds and securities, bonds and stocks or other securities from the business to the savers. The investment banks will facilitate them, and then the savers will give the money. The investment banks will get a cut and give it to the business. Okay? Investment bank functions. Let's talk about investment bank functions. What are the functions of an investment bank? Number one, they bring new securities to the market. They bring new securities to the market. Okay? So there will be new debt, bonds, and equity in the market because of investment banks. They accomplish this through the process of underwriting, which I'm going to discuss in a short while. Let me first enumerate all of them. Then we have market making. So when it comes to market making, the bonds and the securities are already outstanding. What basically happens is the investment bank will just create a market for those securities. The investment bank will buy securities that are already outstanding, issued na, no? And then they can also sell it. Market making. Client-related trading. So buying and selling of stocks on behalf of a client. Buying and selling stocks on behalf of a client. Proprietary trading, meaning to say, buying and selling stocks, buying and selling bonds on behalf of itself for his or her own account, for the investment bank's own account. Then mergers and acquisitions, the investment banks also play a role in case there would be acquisitions, combinations of businesses, or maybe investitures, the opposite of combination. Okay? So basically, these are the functions of the investment banks, which I'm going to discuss in a short while. Number one, they bring new securities to the market. They bring new securities to the market. Number two, they do underwriting. 3, market making. 4, client-related trading. 5, proprietary trading. And 6, mergers and acquisitions. Mergers and acquisitions. Okay? Bringing of new securities to the market. I already discussed this in the introduction. I want you to imagine a company named Company A. Company A, we would find a balance sheet here. Company A, you can find here a balance sheet. Okay. Company A would need to invest in assets and therefore, Company A needs funds. Saan manggagaling ang pondo? Where will the funds come from? They can come from issuing bonds or issuing stocks. The investment banks will help Company A issue this to the market, bringing new securities to the market. What the Company A would do is to sell the stocks or the bonds to the investment bank. And as discussed a while ago, the investment bank will pay for them. The investment bank will then sell those bonds and stocks to the savers or investors, this person here. And then these investors will, of course, pay for those securities. Okay? Role number 1, bringing new securities to the market. Bringing new securities to the market. Okay? The issuance of securities with the aid of an investment bank can come in different forms. These are, by the way, called primary offering. If these are newly issued securities, meaning the stocks, the bonds are new. Hindi pa sila na-issue dati. These are new stocks, new bonds for Company A. We call it a primary offering. Okay? When it is issued for the first time, those are said to be primary transactions. Primary transactions issued for the first time. Now, if they are issued for the first time, and this is also the first time that the company is publicly listed, we call this the initial public offering. Okay? A primary offering that would be considered an initial public offering is one wherein the issues are new, they are not yet outstanding. The stocks, the bonds, they are new. And it is the first time as well that the company will become listed. When I say listed, it is now registered in the stock exchange. Okay? Can you buy and sell Jollibee securities? Can you buy Jollibee securities? Can you sell them? Yes, because they are listed in the stock exchange. Can you buy and sell the securities of, okay, give me a small company. Okay, give me a smaller company. Can you buy and sell the securities of, say for example, Silicon Valley, no? Yung computer parts. Okay, they are not publicly listed. Okay? I'm not talking about Silicon Valley in the US, ha? I'm talking about our Silicon Valley. Now, they are not publicly listed. You cannot own their stocks or sell them. So, if it is the first time that the securities are publicly listed, we call it initial public offering. Okay? If there will be a new issuance of stocks and bonds, but this is not the first time. This is not the first time that they are publicly listed. We call it seasoned offering. Okay? Seasoned offering. So a primary offering to the public may come in the form of initial public offering, meaning to say this is the first time that the company becomes publicly listed, or seasoned offering, meaning this is not the first time. This is the second, the third, or the fourth time that stocks and bonds will be issued to the public. Not the first time anymore. Now, if the investment bank will help the company acquire funding, but not in the public, we call this a private placement. Okay? In a private placement, a select group of investors would put funding into the company. Private placements are very helpful for startup companies. So imagine if you are starting off your own app or whatever kind of business that you have. Kunyari, nakagawa kayo ng napakagandang app. It can be a game or what have you. A new app for banking, a new app for groceries, a new app for shopping. Kakalabanin niya si Shopee, kakalabanin niya si Lazada. But nobody believes in you. The public isn't believing in your story yet. No? They are not going to believe that you will be successful sometime. You have to look for people who are going to believe in you. And this is what private placements are for. This is what private placements are for. Okay, let me reiterate. What is a primary offering? Stocks are newly issued. The stocks and the bonds, they are still in the company. They are not yet issued. It is going to be issued now. The investment bank will buy them and eventually sell them to the investors, and money flows to the opposite direction. If this is the first time that the company will be considered as a publicly listed company, we call it initial public offering. If this is not the first time that the stocks will be issued to the public, seasoned offering. If this is not issued to the public, private placement. Okay? Bring new securities to the market. A prospectus would be needed before this can happen. What is a prospectus? A prospectus is a legal document containing the information relevant to the offering about the issuer, Company A in our example. Again, a prospectus will be prepared by the investment bank in order to introduce Company A to the investors. A legal document containing information about the issuer, which is Company A in our example. Okay? Now, okay na tayo dito. What happens is the investment banks can introduce the company to different investors, to the public, through what we call an investment bank roadshow. Investment bank roadshow. It is to introduce Company A to different stakeholders in the public. Okay? The company's management and investment banker will have a road show. They will have a debut. They will have a debut. To meet, number one, of course, potential investors who would provide funds to the company, who may provide funds to the company. Potential investors. Investors, they are going to buy the securities, probably. And what we call the analysts. Analysts are those who follow the company's stock or bond. Analysts are those who are interested about the price of the stock, the technicals, the fundamentals of the company. Okay? So the company's management and investment banker will go to the public to what we call an investment bank roadshow to meet potential investors who may provide funds to the company, who would buy the stocks, who would buy the bonds, and analysts. Analysts are those who follow the stocks, no? Follow the stocks. So if you have followers in Twitter, for example, they're following your tweets. Okay, analysts are also like that. They follow the stocks of the company. They're monitoring the price. They're monitoring the developments. Okay? Now, this can be accomplished through what we call underwriting. Okay? This can be accomplished through the process of underwriting. So how are securities being brought to the market through the process of underwriting? If the company is so big, investment banks would create a gang. They would create a gang. Anong yung sabihin ng gang? Okay. So pag sinabing gang, there's a group of investment banks. The investment banks would create a group. Okay? And nagmumukha silang gang. And that's why they are called in underwriting syndicates, no? Parang sindikato. Okay? Investment banks will create an underwriting syndicate. Parang sindikato. When we say sindikato, it simply means group, no? Dito lang naman sa Pilipinas, ginagamit natin yung word na sindikato pagdating sa masasamang bagay, no? Parang nagbebenta ng drugs, no? But the meaning of the word syndicate, technically speaking, is simply a group. Okay? More or less, it's simply a group. Investment banks would team up with other investment banks, especially if the company is so large. They would create an underwriting syndicate. As I have told you, the company may issue the stocks and bonds to these investment banks, through these investment banks, and of course, the investment banks would buy them. The investment banks again would sell them to the investor, and the investor would pay for those securities. Okay. How do investment banks create money in underwriting? How do investment banks create money in underwriting? Paano kumita ang investment bank? It is through the buy price and sell price. There is a difference. They earn by buying at a lower price and selling at a higher price. The difference between the two is what we call the underwriting gross spread. The difference between the sell price and the buy price is the underwriting gross spread. Okay. Question. Do investment banks earn commissions in underwriting? Okay. Do they earn commissions in underwriting? Is it a yes or a no? Do investment banks, in the process of underwriting, do they earn commissions? Yes or no? Anyone? Are they earning commissions? Anyone? Okay, someone replied. Okay, yes daw. Yes, sir. Okay, hindi siya sure, no, with a question mark. Okay, in the process of underwriting, when we say underwriting, the process that I have just explained, do you think commissions are being involved here? Do you think commissions are being involved in underwriting? We have one answer, yes. Any other answer? Malamang kung may any other answer, magiging no. So, okay, does anyone want to say no? Please type no. Okay, ayaw kumontra. I think it depends on the deal, right? Okay, it depends on the deal. Okay, generally speaking, in the process of underwriting. Okay, generally speaking, underwriting. May commissions ba? Okay. The answer is, generally speaking, there would be no commission. What happens here is that the underwriting syndicate, the group of investment banks, the underwriting syndicate, which is the group of investment banks, they do not earn commissions, but they earn by buying at a low price from the company and selling it to the investors at a higher price. Selling it to the investors at a higher price. Is that a commission? That's not a commission. That is buying and selling. Pag sinabi ko kasing commission, hindi dumadaan talaga sa ahente yung produkto. Okay? So, in commissions, the agent, they do not really buy the stocks and the bonds. They are just taking possession of it and selling it to other people. When it comes to commissions, what basically happens is the stock or the bond does not literally pass through the syndicate. Is that possible? Yes, that's possible. But the general rule, when it comes to underwriting, the investment banks are really the buyers of the stocks and the sellers of the stocks. They buy at a low price. They will take the risk if they may not sell it. They will try to sell it. If they will not sell it, edi lugi ang investment bank. Okay? An underwriting gross spread is the difference between the sell price and the buy price. This, not commissions, would represent the profit for the investment banks. Okay? Now, when I say underwriting in a general sense, I'm talking about a firm commitment. When I talk about underwriting in a general sense, I am referring to what we call a firm commitment. What is a firm commitment? The underwriter buys the securities at a specified price. Okay? The underwriter would buy the securities at a specified price. We call that firm commitment. Okay? In other words, it's real underwriting. On the other hand, a best efforts bid is just like earning commissions. Best efforts bid is just like earning commissions. It is only an attempt to sell the securities. Okay? When we say firm commitment, the investment bank would really buy the securities and try to sell it to the investors. If there are no investors willing to buy the securities, the investment banks, they are going to keep the securities for themselves. They are already committed to buy them. On the other hand, when it is simply a best efforts bid, there is no guarantee that the securities will be sold to the investor. If the investment banks cannot sell them, they may return it to the company. It represents only an attempt to sell the securities. Okay? It's like the investment banks are telling, okay, company, we're going to sell your securities to the public. However, I will just do my best. I cannot promise you that they will be sold. Okay? Technically, firm commitment is what we refer to as underwriting. Best efforts bid, the investment bank would simply earn a commission. Okay. In a firm commitment, The underwriting syndicate would buy all securities at a specified price. Best efforts bid is only an attempt to sell the securities. Under both cases, the investment bank will have settlement risk. In both cases, the investment bank will have settlement risk. That is, the other side of the transaction will not deliver. The other side of the transaction will not deliver. Whether it is a firm commitment or a best efforts bid, it is possible that the other party will not deliver. Example, in a firm commitment, no investors would be willing to buy from the investment banker. So it cannot be sold. There is settlement risk. In the best efforts bid, what if the company would not be able to pay the investment banks? Best efforts bid, hindi nabenta, sinuli sa company, hindi kayang bayaran ng company. Okay, what to do next? There is what we call settlement risk. The transaction will not be settled. The other side of the transaction will not deliver. The other side of the transaction will not deliver. We call that settlement risk. Okay? So there you go. That's what we talk about. That is basically the two. Ano yung mga binanggit ko? So far binanggit ko, bringing new securities to the market, and it can happen through the process of underwriting. Now, the third thing that I would like to discuss is market making. I would like to talk about market making next. What is market making? Now, in market making, the transactions are now secondary. Naalala nyo kanina sa primary? So far, our discussion was a primary transaction. It is a newly issued security. Kaka-issue pa lang. Ito ay binenta ng company mismo. In market making, on the other hand, this is a secondary market transaction. Let's say someone is willing or interested in selling stocks to anyone, but nobody is buying. The investment bank will buy them. So if this is a seller who would like to sell the stocks, the investment bank may buy it from them. And if there is a buyer and nobody is willing to sell, the investment bank can act as the seller. Okay? So imagine that the stocks, walang bumibili, hindi araw-araw yung bentahan, hindi araw-araw yung bilihan. Imagine if there are stocks wherein the sales and purchases of that stock, they do not happen regularly. The investment bank can come to the picture to create liquidity for that stock. Okay? We call this market making. We call this market making. The investment bank may act as a buyer for those sellers who are not buyers, who have not found buyers. And the investment bank may act as a seller to the buyers who cannot find sellers. Okay? Okay. So the investment bank will be the buyer if you want to sell. The investment bank will be the seller if you want to buy. Sana malinaw yan, ha? Sana malinaw yan. Okay? We call this a secondary market transaction. Why is this called a secondary market transaction? Why is this called a secondary market transaction? The stocks or the bonds, they are already issued. Is the company still involved? Is the company of the stocks that we are referring to, is it still involved? Not anymore. Example, if we're talking about the stocks of Jollibee here, if we're talking about the stocks of Jollibee here, in a primary market transaction, Jollibee will be the seller of the stock. If we're talking about Jollibee in a secondary market transaction, Jollibee will no longer be involved. The buyers and the sellers are other parties, investors other than Jollibee. Okay? So investment banks, when it comes to investment banks, they can create a market for a stock. Napansin natin, ay, itong stock na to, hindi masyadong magalaw. Wala masyadong bumibili, wala masyadong nagbebenta. Okay? Anong gagawin natin? What are we going to do? The investment banks will step in, will act as a buyer for those who are willing to sell, will act as a seller for those who are willing to buy. And because the company whose stocks we're referring to is not involved anymore, this is only called a secondary market transaction. How do investment banks earn? How do they earn from secondary market transactions? The investment banks can earn through the spread. As I have told you a while ago, when they buy at a lower price. When they sell at a higher price. The difference between the sell price and the buy price, it represents a spread. We call this the bid-ask spread. The difference between the sell price and the buy price. Bid-ask spread. Bid means buy, ask means sell. The investment banks will act as a buyer for those who would want to sell, but they will buy at a lower price. The investment bank will sell at a higher price to those who are willing to buy. The difference will be the profit of the investment banker. Okay? Yes sir, unfair yun. Hindi unfair yun. Kasi si investment banks, siya naman sumasalo. Kung ayaw mo na sa stock, siya bibili. Kung gusto mo yung stock, siya yung magbebenta sa'yo. As a result, the investment bank can justifiably earn a spread, a difference between the two numbers. Okay? Considering that the investment bank will take the risk that nobody is willing to buy or nobody is willing to sell the security. Okay? Client-related trading means that the investment bank can act as a trader. The investment bank can act as a trader for those companies who have excess cash. So, sabi ng investment bank sa inyo, uy, yung mga sobrang pera nyo, baka gusto nyo i-invest. The investment bank will be the one to take your money and they're going to invest it to some securities. Aside from that, the investment bank can also trade stocks on behalf of their own account. Okay? So, trading of stocks, trading of bonds, trading of stocks and bonds, it can happen on behalf of the client or on behalf of itself. The investment bank may use the funds of different clients for trading, buying and selling of the stocks, or using its own funds, buying and selling the stocks. We call it proprietary trading. What kind of trades can happen? The most common that you know are the equity securities. Ito yung stocks, no? Equity securities, ito na yung stocks na alam nyo. Equity securities, ito na ang stocks na alam nyo. So, equity securities are the most common, but they are only one of the things that can be traded. Other securities that can be traded would include fixed income securities. It would include fixed income securities. It also includes credit products. Fixed income securities and credit products, these are liabilities. Kung equity, stocks, yung liabilities, fixed income, the most common fixed income security is the bond. Credit products, may mga mortgage loan na pwedeng ibenta. I'm going to discuss it sometime in the future. Okay? So, liability securities, okay, for these two. Fixed income securities like bonds. Credit securities like mortgage loans. More on that next time. May topic tayo for that. And we have commodities. Yes, we can trade oil in an exchange. We can trade gold. We can trade silver. We can trade corn. We can trade wheat. We can trade oranges. We can trade soybeans. Commodities can also be bought and sold in an exchange. Okay? Pag sinabi kasi nating exchange, ang nai-imagine nyo lang yung stock exchange. But in other countries, especially the US, there are exchanges for commodities. Gold, silver, soybean, orange, wheat, okay? Oil, crude oil. These commodities can be traded in an exchange in a similar fashion to equity, bonds, and mortgage loans. What is trading? Trading is buying and selling securities for other clients or for itself. Client-related trading and proprietary trading, respectively. Next, a very interesting function of investment banks would include mergers and acquisitions. Mergers and acquisitions. A very interesting function of investment banks are mergers and acquisitions. Now, just a piece of advice, if you would like to start working in a serious finance career, I would highly advise you to start in an investment bank. Okay? I would highly advise you to start in an investment bank. So we have here mergers and acquisitions. Mergers and acquisitions. What are these mergers and acquisitions? Imagine that company A would like to buy company B. Okay. So anong naalala nyo? Sabihin na natin si Smart, diba? Si Smart, kinain niya si Sun Cellular. No? So, we call that a horizontal merger. Merging of two competitors. Horizontal merger. So, if Smart would like to buy Sun Cellular, okay, the question is, at what price? The question is at what price? Okay? In answering that question, Smart will be interested in knowing the value of Sun Cellular. And Sun Cellular would also be interested in knowing its value so that they would know what price will be set. Okay? So, if company A is interested in capturing company B, we call this an acquisition or merger. There's a difference between the two, but I'm going to explain them some other time. The point is when they would need to combine or maybe they would have to separate, the investment banks can act as the experts in determining, number one, the valuation. What's the right value of the acquiree? In setting the price, the value would be very much appreciated. Okay? Knowing what the value is would be very helpful in setting the price. Now, Company A might be concerned that Company B's operations, finances, and legal things are at a mess. If it is messy, there should be what we call a due diligence. Okay? Is Company B really a healthy company? Or is there anything wrong with the legalities of the operations of Company B? We have what we call due diligence. Investment banks can provide services in arriving at the value of the company, as well as performing due diligence, similar to an audit. Due diligence, you basically use audit procedures to determine whether everything is good within the company. It can be a financial due diligence. Pag legal due diligence, syempre law firm yung kailangan nyo. Okay? So these are the investment bank functions. These are the investment bank functions. Okay? Let me enumerate. Okay. So what are the investment bank functions? Number one, they bring new securities to the market. And number two, it can be done through underwriting. Making a market for securities, secondary market, okay? An investment banker may act as the buyer for those who want to sell the stock and a seller to those who want to buy the stock. Client-related and proprietary trading, trading in exchange, buying and selling in the exchanges. Then finally, mergers and acquisitions. Kung seryoso kayo sa finance, magandang functions itong mergers and acquisitions. Now, next meeting, I'm going to talk about that, no? Because my job was very much similar to my job was very much I was working with a company which is very similar to an investment bank. And we are also assisting mergers and acquisitions. But again, yeah, yung point ko, gusto ko sanang i-explore nyo yung options nyo sa mergers and acquisitions. Okay? So what are we going to do next meeting? Next meeting, we're going to finish. We're going to finish the discussion, the introduction to investment banks, especially the issues and concerns. Okay? Issues and concerns in investment banking. And number 2, a similar type of company to an investment bank is what we call securities brokerage. Okay, securities brokerage will also be touched. However, it will be of a very limited coverage. Okay? So, any questions so far? Any questions so far? Okay, I'll stop recording.